Hello, everybody. Thank you for coming. Today is July 6th, 2 days after the 4th of July and the greatest crash in crude's history. I'm joined by Jay. Hey, Jay.
What's up, everybody?
And brief recap, we have the S&P located at 3850. If you're watching later, the metals have been getting smashed. There seems to be a bear market in a lot of the commodities. Today, the market was up on mediocre internals. Everyone was buying the big names because we had the Fed minutes and they included less of the word restrictive. So I guess,
that was the takeaway from it?
Yeah, there were only 4 uses of the word restrictive. And I guess they came for the fat man, right? For the big fangs today, Jay?
Yeah, for the most part. Not as far as flow is concerned, they were playing SPY, weekly, and same-day expiration shit. They were like, that's as far out as they were going. You know what I mean? They didn't have much interest in anything beyond that.
I mean, it seemed kind of obvious to me, right? They stand in there all day at 38.20 and they're not going to let them go lower. Yeah. And then, after the meeting sends them the all clear, whoever had the big buy ticket was just like, okay, let's go to the market.
Yep.
And then,
and Katie, that's because we've been talking about this on not only this webinar, but even right before we started here, just how difficult things are. That's about the only trade that I've had somewhat felt comfortable with is it's got to be on an intraday basis where I can get a feel for how the tape is, how the price action is, how the flow is. Like, I need all that information in front of me, and then still more days than not, I still can't pull the trigger because I am so confused. You know what I mean? But the only trade is like today I made a little bit of money just because I've been leaning for a squeeze here because positioning's been a little offsides, right? Mm-hmm. But I'm not going to stick my neck out just because positioning's offside. You know what I mean? I need to see the squeeze in process, and I'm willing to get involved on an intraday basis. That's the extent of what I'm doing.
Why does it seem like they're in such a rush to buy them is my question, right? You see, and why is it so, Jay, why is that price action so, I don't have the answer. Why is it so frantic?
It's just, people, liquidity is.
Right, top of book, there's nothing top of book, right?
Yeah, so, and there's like a real buyer strike out there. There are no real buyers for good reason, but there are no real buyers. Everybody is either on the sidelines, right? Or short with hedges on, you know what I mean? And the only buy button they're going to click is when they want to take some hedges off and cover some shorts, or get in for a tactical squeeze. You know what I mean? That's what everybody's looking at.
Or if you're trying to ignite an up move, right? Don't you start with the big sectors of the index, like, or the most beaten down, right? I mean, I guess
you're right. They go for a lot of the shit sometimes, like these ridiculous names that are going to zero. You know what I mean?
Speaking of which, Gamestop split 4-1 today.
4-1.
Or maybe it announces it.
Maybe now it's closer to zero. Maybe it makes it easier for them because I guess 120-ish. So you figure it'll be around 30-ish. That can go to zero in 2 days if they want it. No?
Yeah, I mean, how long did it take Bear Stearns? It took him about 24 hours to go to zero.
I don't know. What's your opinion? Who's holding this up? Don't give me diamond hands. Everything else, diamond hands, has been obliterated. I don't want to hear diamond hands. It's a fallacy. That's the biggest con through this whole bull market, the COVID lows, diamond hands. It doesn't exist. There's no such thing. You know that.
Yeah, I mean, what's holding it up? I think people have jobs, they got to buy stocks. If they're going to buy stocks, they're looking for anything, anything to get long.
This is the casual buyer that's holding up GameStop. You don't think?
Oh no, I have no idea in regards to GameStop. To me,
no, I'm not talking about the market. The market's right. I'm talking about how's GameStop not at $1? How?
I don't have the answer other than there's a float. How large is a float? Still, it must be huge.
GameStop's been around. Like, I know GameStop. I've traded it several times. They have nothing but headaches. You know what I mean? Nothing's changed. Like,
Can you borrow the stock?
I guess is that the problem? Nobody wants to get short of it. Nobody can get short of it because they got burnt. I don't know what the answer is.
I mean, it's easy to become friends with the crackhead at the end of the bar, but there's probably safer friends to have. It's, you know,
That's I just, from my experience, and you can probably relate, these are the names, this is almost like e-toys during the 99 boom, or K-Tel, or one of those,
Pets.com. Pets.com was worth more than General Motors.
Right. So one of those names staying afloat, the biggest liquidity drain we've seen in our lifetime, and this name somehow is hanging in there, and is over $100. It's $120.
So I had an old friend on the floor named Jay Walsh, great trader, but he liked to use logic, and I'll use the same expression. Jay, please release yourself from logic.
Forget it, right?
Right.
And
I mean,
that's the market. The one stock you would think would be the first one to go to zero of the bunch is the one holding up. Look at AMC. AMC has been beat up. That's the other one. They beat up that one good. They beat up all. They killed them all. But GameStop, they're letting live. Maybe they want to reel in a few more jabronis after this split, and then boom, they give it to them, Greek style.
Isn't it funny how we explain ourselves away from things that don't make sense by just making a joke out of it?
Yeah. Well, that's the easy way out.
Right. I mean, it seems like that's the only defense mechanism I have when I can't make sense of anything.
That's a lot. That's a lot going on there.
Right. Like, or just make sure everybody out there that if you can't make sense of something, don't lose your sense of humor about it.
It's true.
Right.
This market, you have to try to enjoy this market. Otherwise, I'll make you nuts. Yeah, seriously. You know what I mean?
Who needs ayahuasca, right? Like all these people finding themselves through psychedelics. It's like, you can find yourself clear as day trying to just trade.
This is one.
So what happens? You filled up your tank. You got shut down. The bartender at the gas station was like, Jay, you've had enough.
Oh yeah. I'm getting, so if for anybody who don't know what we're talking about, I'm getting blamed for the crude top. The recent top in crude oil. Make a long story short, I was out with my daughter. I stopped at a gas station, normal gas station I always go to. Some Croatian, Russian guy who always fills my tank. I tell him, fill it up. And, I never pay attention. For those of you who know me, know exactly what I don't pay attention. I don't know how many gallons. I don't know how much it usually costs me to fill up, right? It's a truck, a big truck, so it costs a lot. I get it. So he goes and he fills up, he starts filling up the tank, and then I get a knock on my window. So it's like I was telling you, Katie, I was like, oh, what's this guy want now? I thought he was going to chew my ear off about Bitcoin, because he's been bothering me about Bitcoin, because I told him ages ago not to buy it because he was going to lose all his money. He lost all his money. Now he's crying the blues. So I thought he was going to chew my ear off about that, but he didn't. So he's like, sorry, brother. No, I can't. No more gas for you. $150 cap per car or whatever. So I had no idea what he's talking about. I'm like, what are you talking about? 100. I'm like, what is it? My card didn't let. No, 150. That's the law. $150 cap. So now I'm bugging out. I'm like, what are they? They're capping gas to people. Like my mind starts racing in market terms now. You know what I mean?
Yeah.
Like, what's going on here? So I tweeted out, and it started a little mini frenzy. Like people are starting to bug out. Like, what's going on? Oh no, short the futures. They didn't know what. Buy crude. People are going nuts. No one is it happening anywhere else? They thought they had inside information, like me coming from Eastern Long Island and sharing some inside info from the gas station.
Right, from the whoever, the immigrant who was running your gas.
So anyway,
top, by the way, a nice call on the top there.
Yeah, so we nailed the top. But apparently this is a law that's been around for a while.
I have never heard of it. Is that the most you ever put in the car? Or you've never been cut off, right?
Well, I never been cut off, but I don't think it's ever cost me more than $150 to fill up my tank. You know, I don't remember it being that much ever, but
No soup for you.
no soup for me. No more gas for you, he said.
Oh, poor cat.
So yeah, so we nailed. That was a nice top call. I didn't even realize it to after. That was a great, topping signal right there. And as usual, I just couldn't put it together to realize that.
You know that they need to win in November. So and right, they always say the market never tops in July, right? They're always like the market tops in September, you guys,
Yeah,
August, right? If we're looking for a top in July, it's too early.
yeah, that's
Doesn't
those
the
rules
right?
and
And
things that have been around forever. They'll get you places. So what's the story here? I'm fascinated by this market. I really, it's like pulling my hair out trying to make a 10 cents in this market, but I'm fascinated by like how things are shaking out, how it's going down, because
isn't it so cool to watch them try and create, like, they're through price, they're trying to market to the buy the dip crowd that it's safe to come back.
yeah, that's that. Because think about the setup we have here, right? We
Right.
have now, okay, where it should have been obvious to people. I remember the first webinar that we were doing together, we were talking about this, but it's now, I think, common knowledge to everybody out there. It dawned on them that the Fed is actually physically rigging this game, right? They're tightening financial conditions. They want risk assets to go lower. They want spreads to widen. It's all part of their plan, right? So they're manipulating basically the market, right? The same way
Yes.
they manipulate it to the upside. For the
Yes.
first time in our careers, they're doing it to the downside. Okay. So now it's obvious to everybody that we know in this game that it's official. They are doing that. So what transpires from that? Who the hell is going to be long, right?
Well, we
So
we should congratulate them. They all sold at the top, remember, and resigned.
who?
The
Oh,
Fed,
the Fed. Oh my God, that's between the Fed and the major CEOs, Microsoft,
right?
those guys, they nailed
Bezos, all those guys all sold at the top and got it.
They nailed it. They nailed it. How they get away with it is beyond. I can't even imagine. They
Okay.
nailed it.
So,
Unreal.
like, we
And
apologize to anybody watching that it is not a level playing field. We did not make the rules,
oh
and
my God.
it's a
Well, they
hell of
knew that, but
a
they don't
painful
even hide it.
realization. No, they
They don't
don't.
even hide it anymore, Katie. Like Clarida. Oh yeah, my bad. I traded. I should have never traded. I'm gonna walk away and sell everything. Whoa, what great timing! Like he was doing us a favor.
Favor, right? Thank you.
I'm not going to play anymore. That's it. I'll cash in my chips. I'll go on vacation. And he caught the whole up move and got out at the top, Clarida, right?
Yeah, well, it helps to know what they're going to say. Anyway, yes, to your point, but to the people watching that, it's one of these things where you have to come to accept that we're the mark at the poker game. We're right.
Oh my God. Like
So
we always listen, we're well aware that this game, it's a fixed rig game. We know that already.
right. Yep.
But sometimes it boggles our mind how out in the open, like they don't even shy away from it. It's almost like Pelosi fighting the new law they're trying to put in place where her husband can't trade. She's like out in the open fighting it. Like, listen, no, we're making a killing off this. We can't, you know what I mean? Like,
So right. So to the people out there, maybe in another generation or two, things will change, but this is the current situation that we're facing. Back to our original conversation about where to from here, right? Like they're buying them and they're trying to market the price action as safe to come back to, from a long-term perspective. Stocks are cheap, you're getting a discount, NASDAQ's 30 off the highs, and I'm sure a lot of names are way further down than that. What do you make of the foundation underneath this, Jay? Like the way it came off the low, like all the other lows for years, for decades, right? They'd come off the lows and they'd never look back. Right.
Yeah.
Like, and they're giving you so many chances to buy them down here and they're not running away. Like even today, right? The way they sold off on the bell.
Yep. They
right?
just,
They're giving you another chance. It's like, you
it's
know,
just, it's a weird, I'm telling you, Kate, it's the weirdest setup I've ever seen in my entire career. Because again, it's not, it's one thing, like I said, you have everyone to common knowledge now, the Fed is rigging the game, manipulating the economy and risk asset stock prices to the downside. Okay. So now everybody has positioned for that. Okay. Basically, everything across the institutional level, professional level, for the most part, okay, they're either in cash or have some sort of net short position, hedge funds, okay, all that. So they're all in a normal market. You jump on the other side of that. You understand? You jump on the other side of that because they're going to get squeezed, right? And then they're going to have to buy, and that translates, that snowballs into more upside. But it's not a normal market, right? You
no,
have,
they're finding supply on the rallies.
of course, I mean, you have the Fed tightening financial conditions. They're not going to let any rally find any legs. They can't do that. That's the last thing they can afford. You know what I mean?
Yeah.
They can't.
So wait a minute. Then the major question becomes, what's the floor that we're standing on?
The only thing that could come to my mind
Right.
is that positioning. You understand? Everybody is positioned for downside.
Right. And in 99 and 2000, when the NASDAQ doubled year over year, sentiment was off the charts positive.
Yeah. And there's one thing, though, that scares me. This is the one thing that scares me as far as on the positioning front, right? I wish I had the chart here because I know you'd bug out. I don't know if you saw it yet. You probably have seen it. Fund flows. Okay.
I haven't seen it.
Oh God, I gotta find that for you because you're gonna. You might honestly, you might poop your bloomers and never take the long side of a trade ever again until that unwinds. Okay. Listen to this. You talk about like coming in late. The fund flow chart. Okay. You had basically hardly any inflows. Okay. For the past, I would say 5 to 8 years through the COVID lows, everything. Okay. You had no inflows. Every time there were inflows, they got shaken out, outflows. They never believed in a rally ever. Okay. Lo and behold, late 2021. Okay. Think about that. Late 2021.
The top. That was the top.
An influx of money comes flowing in, okay, on a weekly basis. Trillions. If you look at the chart, you won't even believe it. That's how absurd it looks. It looks literally like a parabolic move on fund flows, okay, to the stratosphere. All that money that came in, they didn't come out yet. They're still in. They haven't been shaken out yet.
From the highs.
From the highs. If somebody can dig up that chart and throw it in the chat on Zoom here, you could see it. You have to see it. Actually, I can, while I'm talking here, I can probably dig it up. But they're still in. All right. And the guy from Bova dug up through history, told us a little bit of, for every $100 of inflows, okay, when you get a bear market like this, at least $40 to $50 of that 100 comes out, gets shaken out. You understand?
Sure.
So if you got like $100 billion of inflows, half of that usually gets shaken out in a bear market. Okay. Nothing's come out so far. Nothing. Like $4 worth. So that's the one scary thing here that, I think somebody dug it up. How do I click on that, Katie? Can you click on that? Let me see. In the chat?
Oh, yeah.
Yeah.
Because the account owner limits who can view their tweets.
Hold on. Let me see.
I follow you. Lords is in the audience. Hi, Lords. Lords came up with this great term for a double bottom and a double top, or a triple bottom and a triple top, was that it's collective. Yeah, and check it out. She diagnosed a triple bottom or triple top or double bottom as collective ambivalence. I was like, ooh, that's genius.
Wow. She didn't come up with that. She must have.
No, she came up with that. I was like, that's genius. I was struggling to kind of describe, we're looking for certainty. In other words, we're talking about the lows. like what floor are we standing on? You know, people are buying them, no question. The last couple of days they came off of that 37.40 level yesterday. People were buying them there, and then again
But
today,
here, how do we, what do you mean buying them? How do we know they're not shorts?
covering.
Yeah.
Well, don't you think a prudent short has gotten their objective? I mean,
Right. So I'm saying, like, for example, I'll give you an example, right? Hedge funds as a whole now, right, they've been net short for the past couple of weeks. Okay.
okay,
The market really hasn't found any follow through to the downside. You know what I mean?
right.
So they wouldn't they like they would cover, they get squeezed, they cover. Doesn't that translate into buying
Of
or
course, yeah, sure, no question, no question, no question.
okay?
And then,
Um,
but I mean, for someone to stand there, like someone stood there at
I'm saying this,
37.40, right?
right.
Right, like you think that a short would be covering, as shorts
More
do, right?
aggressively, you mean?
Yeah, well,
Yeah.
like when stocks get oversold, and we see between, overbought and oversold, right? Like the shorts are more nimble just by the fact that they're the weakest hands, given by, for the last 100 years, stocks go higher. So the shorts, in order to survive, have to be nimble.
Right, right.
Right.
That
So,
makes sense.
when someone's going to stand there and own them yesterday at 37.40, you're like, okay, there's someone there who's big.
Yep.
And then again today at 38.20, there's someone there who's big. But like you're saying, like am I going to take them home after watching them fail? Like if
How
on
do
the
you take
bell?
them? I got to talk to you about that too. I had so much to talk to you about. I was thinking about before I got on here. Hold on. I want to show you this because I won't be able. I'm going to share my screen 1 second. You know how
Okay.
to take it back from me? After I,
Maybe.
yeah, I'll say share screen.
Okay.
Okay. All right. Look at my screen. You see over here to the right?
Oh my God.
Okay.
Jesus.
That's the US, right? Cumulative flows into equities. Look at this is what I was telling you, Katie. Look at this, right? Look at all these years. This goes back to 2015. Nothing. Here's the zero line. Nothing. They didn't believe in any rally from 2015 on this chart all the way up to December of 2021. And then they come piling in like they saw Jesus Christ.
Look at that.
Is that absurd? Okay, now this is up to date. Here's where we are right now.
Hey, check this out. When you see how it flat lines from 19 to 21?
Here?
Yeah, see that flat
Yeah.
line?
Yeah.
Do you see that when a market goes vertical from a balanced position, how there is zero chance of a retracement? See that? Look
What?
where it takes off in 21.
Oh, here you're talking about, right? Right
Yeah,
when it,
you know,
yeah,
right when it takes off, right here at the
yeah,
lows.
right here.
See how there's no retracement?
Yep. Oh
Because
yeah, explosion. It's like
there's no retracement, right? So you use that in your trading too, right? When you see a market break from a balanced position like that,
yeah, like this,
and it
right?
starts to go vertical, either way, up or down,
Yeah.
do not average a loser.
Those I love to trade. Those are the setups. You know, obviously this is fund flows, but even on an intraday or swing
Yeah,
positions, I love when they're dead.
yep,
And then you know what I mean, and you catch them at the start of action, and because
yep.
that's what I like when they come to life. But
Yeah,
is this chart nuts or what? Look where we are right now. Okay.
I
So
mean,
now the guy from Bova is saying your normal bear market, at least half of this has to come out. Okay. That's what usually happens. At least half. Like that's a lot of supply, no? I mean, that's you're talking about it's gonna definitely weigh on the price action unless you got a big buyer who's sitting there gobbling it up.
we have seen the big central banks make themselves
Oh, yeah,
right.
yeah, without a doubt. Without a doubt. So a lot
I
of
mean,
people,
hey, Jay, I mean, I'm not arguing with you, but I'm saying here's a thought, right? Imagine that everybody all of a sudden collectively understands that essentially the Fed and everybody is all in. There's no backstop, right? That in other words, any major sell-off in the system means the end of the economy, period. Because the amount of debt, the amount of leverage, right?
yeah.
What's a leverage in the system? It must be ginormous,
Oh,
right?
forget it. Forget
Right?
it.
Like we can't imagine that, right? Like a standard margin call in a derivative is 20%. And right on all those off the book derivatives that are sitting out there, if they were to all of a sudden margin all those derivatives, there's not enough currency in circulation to cover the 20% margin on the derivative exposure that's in the system. So what if everybody all of a sudden realizes that because everybody, in a sense, the entire system is all in on itself because they can't sustain a margin call?
Okay, meaning what? That the Fed has to come in
The
and
Fed, right? The Fed cannot allow a margin call across the system because there's not enough money in the system to support it. And when they were trying to put enough money in the system to float all the leverage, they got inflation that was 10%.
okay, so but when are you going to make that determination? Like, what level? What S&P level do you? Where do you make that call?
Right, I don't know. I'm just thinking like,
That's the question.
is that
I
your
agree
fund
with you
flows chart?
100%.
Is your funds flow chart just a collective realization that you might as well go all in because everybody else is?
Oh, I see what you're saying. I see.
It's just like,
Yeah, yeah. I see what you're saying.
kamikaze, like,
Right. So in other words, they can't let it get to the point where all this comes out of the market.
right, they
It'd be
can't.
catastrophic, right?
Right, they can't.
Right. I get that totally makes sense.
Right, like all of a sudden people realize, well, if I buy them here and then everybody else buys them, then the Fed can't let it go down because we're all in.
Yeah, yeah.
And, and then the whole, I mean, it's a
See,
crazy way to think.
I think a lot of us, and you especially, I know you, a lot of us we realize like the Fed's not going anywhere. This game is rigged already. So that means eventually they're going to have to come in and rig it to the upside again, right?
Yeah.
Like you just said, they cannot allow something to get to the point of systemic. They lived through 2008. You know what I mean? They'll never let that happen again, right?
Trauma left an imprint on those boys.
Yeah. So the question becomes though, how much, like, when do they create enough damage to the point where either they say enough is enough or something break? Like, everybody I know wants something to break because then that's the ding, ding, ding. Okay, Fed has to do their thing. You understand? If something breaks out there, if credit markets freeze up, anything like that, the Fed is done officially.
Well, put it this way, $6 gas didn't stop them.
Right. See, like that's what I mean. Like, you could still have some more damage out there in the price action before they say, all right, we've done enough,
Right. The consumer is just collateral damage as long as asset prices and there's no margin call associated with that.
Yeah, right. What's his name from Guggenheim said that today. As long as this continues in an orderly fashion,
right?
Then the Fed's going to just do what they're doing.
When housing, right? As long as housing doesn't, right? They're not going to let housing, right? It'll all be an orderly because you can't click them, right? You can't click the mouse and sell your house.
Right. Yeah. That's what I always hate about real estate. Right. I love the market. You press a button, boom, you're out. A bar.
You're done. Right. But yeah, the guys who own shopping centers, they're wearing them.
You know how much money people I knew who blew themselves up in 2008 with that stuff because they can never get out.
Yeah.
You know what I mean? They can never get out.
Right.
The market, you had ample opportunity to get out if you wanted to. Some people didn't, but you had the choice to get out. Real estate, I mean, there were times you couldn't sell, right? There was no bid.
Yeah, and I have to. To me, it's like, oh, real estate should trade at a discount because there's no liquidity.
Yeah.
And the commissions.
And I don't know. I mean, me and a couple of guys from work looked at this once before. If you look back through history, the returns on real estate and the market, right, are really, really close. You know what I mean? Like, over the years, if you put the same amount of money into real estate or a
Equities.
mutual fund,
right?
You understand?
Yeah.
The returns are extremely similar.
Isn't that cool? Like a rise. They always say that wage growth and obviously unemployment and then wage growth are the major factors in regards to housing, and because they, in a sense, housing needs a rising tide to lift all boats.
Right.
Like I'm not selling my house to you unless you're making more money and I'm making more money.
Exactly.
Right.
So, but the point I was making is that that's what I always preferred, the market over real estate, because of the liquidity. And again, you could push a button, make a phone call, and you're out, right? You're in cash.
Yeah, and then some
That's why I
brokers not
did.
smiling you across the table as you write them a check for five
Yeah,
figures
I
for
never the face
nothing.
to face stuff, and and then like, oh yeah, how many times I remember trying to sell this house ages ago. My wife wanted to move to Florida. I wanted to blow my brains out. People had to come in, see it, drive me nuts. Like, it's a disaster. Who wants to be bothered with that stuff? The market, buttons. Back then it was phone calls. Now it's buttons.
Jay, clock a ticket.
Clock and
Remember that?
ticket.
Do you
I used
remember
to
that?
love that though. I used to love that. The phones and clock and tickets were my favorite part of the game.
Yeah.
That wasn't an easy transition for me, getting online and pushing my own buttons for my own trades.
When the exchange closed, there were just cases and cases of order tickets.
Yeah, right. What a
Remember
place.
those old order tickets on the floor?
Yeah.
And I put them on eBay for a penny. You pay shipping.
Oh, that's cool though. I love the smell of those order tickets. I love those
I,
order tickets. God.
probably anyway. The what was it? The carbon in between those papers
Yeah,
probably not
yeah,
healthy for
yeah,
us.
yeah. It was so cool. You felt like a player when you're writing out a ticket. Like
Yep.
when I was a broker, so that was the big thing. How many tickets you write today? You know what I
Yeah,
mean?
that's right.
Yeah.
And we had to save them for 8 years for everybody out there who's
Yes, yes.
so
Compliance stuff, right?
yeah, all of our basements had boxes of tickets, which we hope to never have to go through ever again. And I had friends who would clock a ticket every hour just in case of a need for a ticket,
Wow.
a blank ticket. And I was like, ooh, that's thinking ahead.
Yeah, that's too much of the paper.
And
That's
so,
what turned me off to that managing money stuff. The paperwork and the compliance stuff was just, it got out of control after like 9/11 and all that stuff. It was out of control.
all right, so I guess what we agree on is that, like everybody's starting, maybe that fund flows as everybody agrees that, the Fed, it's cheaper to keep them up here than it is to let them go down. So if it's cheaper to keep them up here, then at a certain point at 30% off, you assume that the Fed will continue to, I mean, you see the balance sheet hasn't gone down, right?
Not much, right?
Not at all,
Where's
not at
QT?
all.
Where's QT, by the way? What happened to QT? I thought it started. The quantitative tightening stuff. What happened? Done?
Well, you know that if you were a journalist, you wouldn't be invited to the press conference because you're asking a tough question.
But seriously, didn't QT officially start? Like it started?
Yes, the
And
roll off, yes.
okay, and what was there a delay I missed? A rain delay? What happened? I don't understand.
Yes, it's a rain delay. There's
Postponed?
the
Because that's what I mean. Like, is anybody asking anything about this, or they just do whatever they want?
maybe they need the money for their margin call if it's
They
going to
got
happen.
bills. They
Yeah,
got
they
bills.
got bills to pay, right? Food got
I just,
expensive.
Katie,
So
I couldn't even do it anyway, but where do you stick your neck out? And even if you assume you're early, you start buying. You know what I mean? Is it now? You know what I mean? Are we there already? You don't think, let me put it this way. Here's the question I'm getting at. You don't think there's still a good amount of pain left potentially if they wanted to? Like, you can't see the S&P 500 going down to, I don't know, 3,500-ish, if not lower than.
can we just call this a prediction-free zone?
Yeah. But I'm saying,
Remember those guys we were trading on the floor and they'd always be like, the clerks would be like, I think this or I think that. And you'd be like, here, make a trade and then we'll talk.
yeah, well,
And then,
what are you going to base it on? What else are you going to base it on right
and
now?
then come on
I can't
today,
base it on anything else.
right? Even today, we're talking about how frantic the price action is.
I know.
And then how we have so little confidence in what we're doing. And I'm like, well, what's the floor underneath the market? I'm like, it's not a great floor underneath the market, structurally speaking. Yet you look at your fund flows. Who am I to say that those people are wrong? Right? It's so
You know what it is? History. Usually they are wrong. They're
I know,
always wrong, aren't they?
but I mean, in 99 and 2000, they were right, and the Nasdaq doubled year over year. So there is precedent for them being right. So it's not, put it this way, they can be right. I mean, you asked me where,
No, 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 no. No, I don't
Uh,
think so.
I
Wait,
mean, how
they
you
could
don't
be
think that
right.
you don't think they can be right?
They could be right temporarily,
They've
but
been, yeah,
eventually
they're wrong now, right? They're
the
wrong.
market will get the market will get its money. You know what I mean?
Hmm.
It's almost like, were they right with all the meme stocks and all that? I guess if they sold, they're right, but eventually they all lose all that money, you know?
You know why? Because they all think they're smart,
Yeah, it's gonna go on forever. They're
right?
good at it,
Well,
right?
or how's this, right? They every dip they've been bailed out.
Yep.
Every
Every
dip, every dip. So, maybe their great grandchildren. I mean, when the NASDAQ top in 2000, everyone was like, not in our lifetime are we going to see it take out the highs, right?
Yep.
And I don't know if the Japanese market did or not. I don't think it did ever take out that 40,000,
No, I don't think it did either. No.
right?
The
So,
Nasdaq did, I mean, eventually, but look how that was a long time, boy.
I
That was a
mean,
long time.
it's pretty lonely out here trying to make sense of this market when, we used to have people on the floor. We could hang out like this and be like, geez, right? He'd be like, Jay, can you make sense of this? Because
Hey,
I'm
but here's the thing that's different, I think, with this market than any market we've been a part of. I think everybody is effing lost. Everybody. You see an interview with Stanley Druckenmiller. He's lost in space. He has no idea. He's like, I'm not shorting him here because at any minute a bear market rally can run your ass over and you're finished. And I can't make a bullish case here for the life of me. So what does he do? He moves to the sidelines, wait for a better setup. Whenever it comes, it comes. Like the smartest minds on the street, nobody has a clue, Katie. Nobody has a clue.
it's like experience is a handicap, or has our experience from everything that we've learned in the past decades is not
It doesn't
relevant,
apply. None of it applies here.
right? Not applies.
It doesn't apply. How could it apply? You know?
You know how it applies? It applies like that used to work, so therefore it doesn't work anymore.
Right, right. But I'm saying, some of the principles and the disciplines you learn from experience, they hang out, they help. But other than that, the stuff market conditions you've experienced, none of that shit applies. This is
Yeah, like how about right, like the test of the lows? There are no such things as test of the lows. It's like someone big, like the other day, yesterday, where they stepped in and owned them at 37.40, right? There was no spike low and then a test. It was just a
that's
solid,
been gone for a good while too, right?
right?
You know
So,
what?
so
Go
you
ahead.
maybe, yeah. So I'm just saying that, I mean, essentially because we have the experience to know that everything else that we've seen work is not working to the
Right,
degree that it used to, I'm quicker to take a loss and more, I'm curating my entries.
right, right. You've learned. That's one thing where the experience came in handy. You learn to be. You're not going to be stubborn, right? You
Right.
know you can be wrong no matter what.
And you look at Druck's like, I'm waiting.
Yeah, yeah. Well, drunk on your point, Drunken Miller made another point that he said his best signal, okay, throughout all those years where he knocked the cover off the ball, his top signal was when a stock got hit on negative news, right? Went down and they bought it up. Okay. So, in other words, a company warns earnings, shits the bed, the worst quarter ever, stock goes down, but then turns green. That's the biggest bottom signal he's ever seen in his career. He said that you play that now, you'll lose all your money. Take that and throw it
No
out the
way,
window.
really? Wow. Wow, wow,
Now
wow.
they do that all the time, and then they make new lows. A couple of days later, they make new lows.
Really?
Yeah,
Okay.
he said that was his number one
Jay,
signal for all those years.
is that because the moving averages are now pointed lower?
I have no idea. I have no
Like
idea. Maybe
like like the
I
big money only
bet
chase
on it.
right, the big money chases big gap downs when the moving averages are pointed up, right?
Yeah,
But if the
yeah.
moving averages are pointed down, that means anytime that you're buying the dip, you got to be quick with the moving averages.
Or could it be the machines and the programs that we were talking about that know this as well, and now they're using that liquidity to sell it into, right, to take
Right,
that
right.
smaller profit.
Right, like all the buy the dip crowd is like, oh, look, a bashed stock gets
Yeah.
smashed, right? But the backdrop, the structure, the longer term perspectives are pointing down. So,
Right, right, right.
right, people aren't adjusting for the fact that obviously the trend is down. So that anytime you're participating counter trend, you got to be quick.
You got to be quick. You know, I mean, maybe I'm just, I overthink it. You know what me personally, I think what happens is, right, we all have realized that, but now what the machines do, the programs, right, they want to beat that. So what they do is they buy it before that stock comes back completely. Okay. So when it starts to turn, they get into that buying. And then when guys like us are waiting for the confirmation of the term, they're selling into us, right?
Yeah.
Take
You're
that.
you're the mark. You're the
Yeah,
hook
yeah.
right there.
Hold on, here they come. They're gonna come and buy it from us. Hold on, hang in there. Here you go. Boom, hit them. Right?
Yeah. Yeah. And I see when they start to go down, they don't bounce at all. Like,
Nah.
right, if you're trading a reversion to the mean program, when they start to go down and you're buying like 3 standard deviations down by however you measure, you know, like big weakness to the mean, and they still don't bounce. It's like,
Nope. There's
wow.
so many things like that, especially, you know, like Matt was talking about at the beginning before we started recording on the sentiment side. But you know, when you get into these liquidation phases anyway, we're not even in that, but
Mm-hmm.
the Fed rigging process is in itself liquidation phase. All that stuff goes out the window. No, when
Mm-hmm.
people need to sell, they sell. So I think that's how we got to look at the current environment right now. It's one slow moving liquidation phase where all the rules, you got to flush them down the toilet because they don't apply.
Or
Or what?
or flip everything on its head because the moving averages and trend is down.
How do we flip them on the head? How do we do that?
Instead of buying the dips, we have to look to sell the spikes.
Oh, you're saying just do the opposite.
Right, like look in the mirror is would be the first place to start. I'm not suggesting that everybody, you know, that's your new religion, because trends do change, but they
I think, yeah, listen, for anybody who's listening out there, we're two degenerate nut jobs who have been in this
right.
game a long
Too
time,
long.
who like to make ourselves even more nuts. Anybody
Hey,
who's new to this game, the best thing you could do, the smartest thing you could do is try to be as patient as possible through this mess. And listen, it can go on for a long time. Who knows? It can go on for a long time, but it's worth trying to wait it out because, and you're hearing seasoned professionals with experience in the game telling you how difficult it is. It's
notice he didn't say a successful professional.
but I'm saying, you know, success, my definition of success is you're still in the game. You
Right.
know,
Yeah.
if you're around a decade or so and you're still in the game, that's success in my eyes.
How
Right?
about this? How about we tell people to shorten their duration? Like, it's much easier to predict the next 5 seconds.
Yeah, yeah. Well, some people just don't have the luxury of trading that way, right? If they
Oh,
if
right.
if they don't, you know, if they're not around in front of a screen, like you can't, if you're not in front of the screen all day long, you can't do that, right?
No, no, you can't. You
Can you
cannot do
imagine?
that. Or
Hey,
maybe
if
you
you
could.
have a, how about this, Katie? If you have a loose bladder, you can't do that because you can't
Right.
get up and take a piss in this market and walk away from the screen.
Right. I've stopped going to lunch.
Yeah. So you're going to be in front of the screen all day long. And people, you know, not everybody has that, I call it a luxury, but you know, not everybody, not everybody can do that. But yeah, shorten your duration. You're 100% right. 100% right.
Yeah, if we should, if right, because if we're uncertain of the structural background, whether it's up or down, at least you can, without having to have many tools of diagnosis, it's probably easier from a shorter term perspective to get a feel for where things are. If you're cold, you know, if you're in a cold streak, maybe the same thing applies, is trade small and trade for short duration.
Yeah. And you'd be more inclined, if you're doing it the right way, to take losers, right? You're going to have to take your losses when you're wrong. Yeah. Right. Yeah. Because what happens is that a lot of people fall into the trap when they hold overnight in positions, they sit in them and wait and wait and wait. And this market can tear you up by doing that. You know what I mean? It can tear you up. You can't do that in this market.
You know what's interesting, as we were talking about, our lack of confidence has actually made it easier for us to get out of losers,
Oh yeah, right. That's a good point. That's a
right?
good point. You
Like,
can't. That's a. I laugh. You know, I made this comment on Twitter just to stir people up because I see them all day long doing it. the people who are out there pounding their chests right now in this game, you know, are the biggest pikers on the face of the earth, right? Like, give me a break, guy, right? You're pounding your chest in this climate. I made the point, like, you got guys like Drunken Miller who their head spinning and, you know, they're ashamed to talk, right? So the best thing you got to kick at this, Drunken Miller, the interview starts off, the guy brings up a good call he made about the market. So what do you think Drunken Miller said? He didn't say, oh yeah, I made the good call. Did you listen to me? Like some of these guys on Twitter? No. He goes, yeah, how come you talk about the one good call and you didn't talk about my 10 other bad calls I made with you? You know what I mean? Like he's modest. He's not bashful about how difficult the game is, especially now. Like he don't want you to bring out his one winner to make it look like he's some god in this game. You know, he wants it known. Like, listen, even for me, this thing is ridiculous right now. You know.
Hey,
so
do you remember the phenomenon of summer Fridays?
what do you mean summer Fridays?
You remember in the markets like summer
Dead
Fridays? Yeah, no,
Dead
they used to be quiet. Yeah,
Yeah,
dead days. You remember that?
now you have Powell maybe speaking at like 10:30 or something. You know what I mean? You got
Yeah.
every day it seems like something's going on.
I mean, but
CPI number, jobs.
I mean, I mean, is it possible? Like we're in the summer.
Well, that thing's quiet down.
Yeah.
I think this is quiet. What's going on now is quiet.
Yeah. I mean, it is relative to where we've been.
Yeah, like this is the quiet time.
Right. Like
What's
summer,
gonna happen?
right? Summer Fridays were a thing. Like, does people still get them?
What's gonna happen September?
Well, the election, right? The election will come.
Ooh, I tell you, that's one. I tell the story to all the Steam Room members. Every September, like late August, I had one mission when I was managing money: get everybody into a high cash position every year. I don't care how bullish I was. I don't care what anybody was saying about the market. You couldn't tell me anything, okay? Because I couldn't be as nimble with clients as I am for myself. So every time, like clockwork, I used August to generate cash and to be in a cash position because September, October, October's known for bottoms.
Right. Yeah. Frank on the chat's like, yo, late September, great bottom time.
September's can rip. I mean, they could get vicious, crazy.
And then tell me about the January effect. What is that?
Honestly, I don't. Does that work? I don't follow it much.
They used to, right? They'd paste all the losers into December and then people would buy those.
Yeah, but I'm saying you're talking. I thought if January's up, then.
Oh yeah, of course, right. The first week pretends
right.
The first month pretends a year.
Oh, you're talking about something else now? What are you talking about?
Yeah, the January effect was always that people sell their losers into December.
Oh yeah. Sometimes we see that play out too in the flow where they go bottom fishing for some of that stuff.
Right. So
I don't pay attention to too much of that stuff.
Yeah.
Selling may go away. You do that?
No.
No, I never go away.
No, I mean, the cliches are there for a reason. I'm sure there's historical precedents.
Yeah, like Ani's saying, I think with the programs, Katie, all that stuff is useless. Hits on a bowl, None of that stuff works anymore.
Do these guys who manage money, are their jobs safe if they're down on the year? I mean, if the indexes are down on the year, it gives them cover, right?
Right. Like right now, supposedly, hedge funds have been doing as well as they've done in the past decade.
Yeah, right. You see Bridgewater was up 32% for.
Yeah. Because macro's involved, they can hedge effectively sometimes. But it's a lot of it's been pair trading out there, right? Short the growth names, long SPY, stuff like that to take the edge off. When you had a market rigged to the upside, you were an ass if you did any of that. It cost you money.
Right. All you needed was an index fund in the whole thing. Hey, did the XLE top way before the crude?
I don't know.
I think it did, right? I think that like stuff like Exxon and stuff like that turned tail.
Oh, some of the was it XO
before the bartender at the gas station cut you off.
Maybe the gas attendant was shorting XLE even before we met. And
right? Can you just punch it up? See when XLE
Let me see.
Topped.
XLE topped exactly on January, what? June 8th, June 8th.
And when did crude top? I'll tell you that. Hold on.
Yeah, crude topped after that.
Right? I can close it. Hi to everybody out there. Martin,
June
Lords,
14th, June 14th.
Annie, June 14th. So it topped 2 weeks before, right?
1 week.
Thanks,
right?
Frank. Only 1 week.
Yeah. Right, not including Martin's making the point, not including the blow off in crude prior to that, because there was a high before that.
Wasn't there a call for like, there was a call, like Morgan Stanley made the $380 crude call. Did you see that like a week before?
Some people, what, you think this crude trade's done and buried now? There's some people who are thinking you got a gift from the gods here.
Oh, this dip, right?
Yeah. Like if you think this commodity super cycle is in play, it can't be done right now. I mean, what kind of, that was your super cycle? It's over with now?
Ranch comes in with a great comment. He's like, keep an empty Gatorade bottle next to your desk.
For what?
Because we're trading, we're glued to the screen.
Oh, for peeing.
Yeah. And I heard Stephen K the other day yell at some person, you can't take your hand off the mouse.
Yeah, I'm always clicking on shit all day long.
And that's like, I mean, I don't know about the crude. I mean, I always say crude traders should moonlight in a dungeon.
Crude is tough.
I mean, it's the most, I mean, think about who you're dealing with, the Saudis.
Yeah, you got some big shots in that thing.
Right? They chop people up and put them in a barrel filled with acid. They chop up journalists.
Yeah.
Right? In foreign countries and put them in a barrel and then dissolve their bodies. So like you want to trade, like stocks are hard enough and they're not the Saudis.
These commodities, this could be the correction in commodities. It doesn't have to be the complete unwind.
Well, they grow wheat and they grow corn. Right. Okay. So I mean, we can look at that, right?
Let me ask you a question. How about copper? Have you looked at copper? Dr. Copper? If that still applies, Dr. Copper, we are going to be in shambles soon.
Right? Like we should be talking about the bond market because there's all those correlates. Gunlock always talks about copper versus a 10-year,
copper,
right?
But like if you look at copper from the COVID lows, it had a pretty healthy rip for copper. All right. And now, you had like a little mini crash here.
How much of that is China?
Yeah, it's all China though, right?
All right. China. So, and then when was the last time you trusted
this? Like, there's so much to talk about. We didn't even talk about China still in lockdown mode. You know what I mean? Like on top of everything else that's going on, you got China in complete lockdown, and their market. Oh, have you looked at their market? Like it finally found a little floor and rallied recently. But
so
that thing's been crashing forever now.
The canary in the coal mine for that lockdown is the Macau gaming stocks.
Yeah, right.
Right. As soon as they unlock China, right, the first thing that'll move are those gaming stocks. Chinese love gambling.
Yeah, I know. I can't.
Oh, do you see them at the track?
Yeah, of course. Yeah, and the casinos, what do they play? They play that weird game.
They play that weird game, right?
Baccarat.
Oh, yeah, and they play them at huge high stakes.
They play big money.
Big money. And so hence that maybe you buy copper when the Macau gaming stocks.
Macau, yeah, let me see that. The casinos are on fire. Everything looks like shit out there. Yeah, that's what I mean. I like to buy names. I know you like to play ES and that stuff. Like for me, overnight exposure, I like individual names. I like to do stock picking. Okay. And right now, if you put a gun to my head, I don't know what to buy. I'm being honest with you, but I don't know what to buy. I don't even like anything. I don't like anything. This is the longest, probably since 2008, I've gone without actually having an interest in any names. I'm being honest with you.
Isn't it weird how it's almost like we lose a sense of purpose if we don't have an opinion about the market? It's like right, like a midlife crisis. You're having
Why do you gotta do that? You like to get me leaving here, tying my brain in knots.
right? Like
Time with you.
all of a sudden, if you don't have any names or we don't have a thesis, all of a sudden we don't have a purpose. It's so
Yeah.
strange.
It just felt weird. And a buddy of mine brought it to my attention just recently. Like, this is the longest we have gone, he was saying, without like paying attention, having a hit list of a couple names, like having an interest. All right, maybe the market conditions aren't right yet, but if we see some constructive signs, okay, we have this name looks really good. We've been seeing buying in it. I don't have a name.
So
A name.
Ben Hunt, who runs Epsilon Theory, lives up in Reading, Connecticut.
Yeah.
He occasionally walks out there on north of the reservoir near his house. I ran into him on my bicycle. He
You
wrote a
ran him
piece.
over?
No, I ran into him. He was actually
Oh,
walking down the hill and I was going up the hill super
oh,
slow.
that's
And
bad.
I was like, and he had long hair during COVID. And I was like, Ben? He goes, yeah. So I went in and introduced myself.
Right.
And I asked him, what he was thinking. Because he's of the burn it the fuck down, his sort of mentality.
Oh,
He writes a
yeah.
great newsletter, called From
Yeah,
Epsilon
yeah, I
Theory.
know. I saw him. I know him on Twitter. I think I follow him on Twitter.
Yeah, he wrote today, he was talking about how and it's killer charts about how the Fed thought that they could financialize the economy. In other words, make us all wealthy by increasing the value of assets without increasing GDP.
Right.
And now Ben and shows charts how the GDP and individuals' personal wealth on a collective level had mirrored itself. And it makes sense, right? As
Yeah,
GDP
yeah,
improves, right? All rising tide lifts all boats.
definitely.
And then and starting in Greenspan, and then his disciples, Bernanke and the Yellen, and then Jay here have all pushed that envelope to the point where now the piper has to be paid.
Oh, so he thinks he thinks this is endgame here.
Yeah, I mean, it's just the beginning. I just caught what he was writing today, but it's an interesting concept of that. I'm trying to touch on the fact that you and I are kind of at wit's end, like the valuation metrics, the free market price discovery, all the things that, the test of the lows, all those things where real price discovery
Right.
had functioned and people acted with confidence have been distorted by decades of the Fed's experiment of trying to make people wealthier without GDP following along.
Right. Right.
And then of course we got
Makes sense.
inflation, right? Isn't that interesting? And
Yeah.
so I think I'm not a subscriber and it's not free yet, but it will eventually be free. But you can find them under Ben Hunt or Epsilon Theory. But I mean, so maybe is that why? Like, it's like the Fed was doing this giant ayahuasca trip for 30 years. And we're like, well, like last I checked, we trade in the real world and we see, and because we can't figure it out and because we don't see things making sense, that's potentially the rest of the world coming to terms with the fact that none of it has really been related to actual GDP or productivity figures, or right, it was all of 9 trillion, the balance sheet.
Yep. Yeah. It definitely was. Right.
I mean, are we just explaining away the fact that we don't know what's going on?
Yeah. Does that mean the end game is here now?
Oh, I don't know. I
Right.
don't
But
think.
I'm
No,
saying,
I would think right now. I would think like the Roman Empire took 400 years to come down, and they said I saw it today. It took 86 years in the very end. So the Fed will continue to print, right? The euro goes to $1, right? The Fed can still print.
right. That's what I'm saying. They still have ample amount of ammo, right?
Right.
They're not
Gar-
out of ammo.
right. Gartman was. I mean, the collapse of the dollar would be the ammo, right?
Right.
And look at gold and silver, right? Can't lift its head. Crypto too.
No, gold got smashed.
Smashed.
Right? Smashed.
Right. Like
Like I almost feel bad for the gold bugs who, were looking for inflation, looking for this, looking for that, and they got hit over the head.
I mean,
You get hit over the head. Like if they wanted to shake out as many gold bulls as possible, they've done a pretty damn good job of it now, right? Like seriously. Yeah,
you would have to say mercy. Like,
that's
like the ref needs to pull them apart.
yeah.
This fight is over.
This is tough. Like
This is
somebody mentioned when I said, I don't have any names to buy. somebody mentioned the Baba and Chinese names. Like that's, I can't buy Chinese stocks. I can't do it. Right? I can't do it. I
I don't blame
can't,
you.
like, put it this way. I don't think I can buy Chinese stocks with the same thought in my mind that we're burning to the ground. You understand? Like, I just, if I like Chinese stocks, I'm probably gonna like American stocks, and I'm gonna go that route. I just put it. I can't get as confident in Chinese stocks, right?
How could you be? They don't ever tell you the truth.
Well, that's what I'm saying. And
Right.
now they officially put their hand in the cookie jar. They start changing laws and rules, and we've seen stocks go from 100 to $1 because one day they got involved.
So can you blame everybody for just being like, okay, get long the NASDAQ 30% down. The Fed can't let it, right? Like the fund flows thing, right? They're not getting out, right? They're just like,
Well,
no.
they're down though.
Oh, fuck
But
yeah.
yeah.
Fuck yeah.
They're not. It's not like they well timed this thing. They are down. They came in at the highs.
Yeah. And I mean, what was it from 74 to, or from 69 to 74? Something, what, there's a 15-year period where the market went sideways.
Oh yeah. Right. So, but your point.
And hey, wait, time out. What if the rally from 1980 to 2022 was an anomaly in history, like a one-off?
Okay. And what though? Where we trade range bound?
Yeah, we trade range bound. I mean, what if that was the equivalent of the dinosaurs?
I,
That period of history that we just lived through, that it's now
I,
officially over.
call me an optimist. Okay, I think that we would like that better. You and I and guys like us. You understand? Rather than
Yeah,
a market just going straight up with no.
at least, right, you have boundaries.
Yeah, you have ranges. You have things to trade off of.
People
So
say that
I don't think
society is failing because we have no institutions that we trust.
Yeah, well, that's definitely the case.
Right. And so, I mean, where does that, if you have no institutions that you trust from a societal level, where does that leave the price of anything? That's completely negotiable.
Yeah, that's what I think. Honestly, I think, and that's what I think is what people need to worry about the most is the point you're making. It becomes a hockey stick type bottom we get out of this.
Yeah.
You understand? Where people are either looking for the crash or looking for that V-shaped rally, and instead we just trade in one decent size sideways range for a long effing time.
Right, because it's never happened, right, Jay? It's never,
right?
right, it's never happened. And the Fed, will try and put a bottom in it, but not be too obvious.
Yeah.
And they'll definitely keep a roof on it, so they don't want, because they don't want to,
especially if they got to fight inflation, they have to keep a roof on it.
Right, and they want to keep their balance sheet big. They don't want to risk having to roll off their balance sheet, or they just want to let their balance sheet roll off.
Yeah. So somebody called it. Somebody had a newsletter I followed. Somebody named the Fed straddle instead of the Fed put. The Fed straddle, where it's almost like they're writing calls, writing puts.
Yep.
Right?
Yeah, that's genius, Jay. That's genius. Iculus, yeah, Paul is still long silver.
Silver. Oh yeah. That got beat up too, right?
Yeah. Oh yeah. He's still, he's trading S&Ps to pay for it. But and he admitted he was wrong today.
Yeah.
So,
wow.
Jay.
Basically wrong.
I mean, so all right. So we have the Fed straddle.
We got the Fed straddle.
Right, and you got to assume, right? So then now it's just a question of.
Well, think about this. The Fed straddle is probably everybody's worst nightmare. Seriously, bears and bulls, because you got bulls who are in cash and avoided a lot of this mess that are looking for that capitulation. Okay, that probably will never come if the Fed straddle is in place. Okay, right. You got, the bears, they're, you're looking for that follow through to the downside and things to blow up. You're not going to get that.
Yeah, the bears here are late, and may still be right.
And the trend is that are underwater. You need kind of that V-shaped rip from the Fed that you usually get when this is done to bail you out, and that's not coming. So it screws everybody.
Right. So I guess without a huge short population, you've got less velocity to the upside, potentially.
Yeah.
And with everyone expecting lower, that means any move lower should be complicated sawtooth
Right.
rather than crash-esque, right?
Yeah.
Vertical, right?
Yeah. Kind of similar to what we've been seeing, where
Right.
you're just not seeing any follow through to anything, right?
Kind of similar to what we've been seeing. Here we are. Like,
I mean,
Jay, observe what's happening, assume it will continue.
oh my God.
Right. Thanks everyone for watching. There you go. An hour in. Observe what's happening, assume it will continue. Victor said that. Victor Sperandio, Trader Vic, 1986. And, and so,
The saving grace is if the ranges are big enough, wide enough. You know what I mean? You can eventually figure it out and make some money. But this, what we've had now is a shit show.
oh my God, it's like,
There's no follow through. So here's the point I was making to Steam Room members quick, right? Where you were talking about basically just being more nimble intraday instead of overnight. Okay,
yeah,
here's my rationale behind it. And this is what I picked up on. It doesn't apply all the time, but I've noticed it almost every single day. Okay, let's say you wanted to get long, all right, and you thought the risk reward was worth sitting in a long. Okay,
yep. Last 2 days.
Okay, but exactly last 2 days. But here's my point: the last 2 days and at any time, you could have found a better entry point on an intraday basis at any point in time. You understand?
Mm-hmm.
So in other words, no matter where you bought it, the market went lower than that entry the next day. You understand? They flushed it and it broke, went below that close and that low. And then maybe it turned green by the end of the day, but you had another entry. You had another shot at that entry. You understand what I'm saying?
Yeah. How about, right, even last night's close where they pinned them pretty good.
Right. So where did we close last night? Let me see. All right, we closed up 20, right? ES
Yeah,
today.
it was like 38.30, right? Or 38 and a quarter or something like that. We closed. I forget.
Right. So like this morning, yeah, we were down. We were definitely down.
Right. You not only had you're like, say you're a bear, right? Hypothetical. And then you just, and then you sold the close last night. You're like, oh, this is a bullshit rally. And even if you're dead wrong, you got a chance to buy them back at break even or even lower.
Right.
Today.
Yeah. And the reason I say that is like a lot of people, somebody I spoke to yesterday was like, they saw the futures up yesterday, like 12, 15 handles after the close, right? And they're like, oh shit, I knew I should have held some overnight. I said, what are you talking
about, right? What are you talking
Tomorrow,
about?
You might wake up, the futures could be down 20, 30. What are you, 15 handles up right now? Lo and behold, I wake up, boom, futures down 15. You know what I mean?
Like, look, you just tell them long after they're dead and gone, they'll still trade.
Yeah.
The markets are going to be there.
Yeah, you can't beat yourself up. Oh, should I held you see an extra 10, 15 handles in this market? That's a sneeze.
That is a sneeze, right? Like, oh, we have people, I see my friends, my older trader friends from Chicago saying, well, I'm going to buy them with a 5-handle stop in the spoods. I'm like, that's a little tight.
Yeah, that's right after click your button, you'll be done.
You're done, right?
You click the button, you're done.
I mean,
that's what's tough about ES right now. I mean, that's the tough part about trading ES. You have to stay smaller and looser. Otherwise, you have no shot.
And the vol is ginormous, right?
Yeah,
and so the theta, right? And so they can freeze the puck just to make themselves right. They just sell the premiums.
Yep.
Like even today on the dips, they were selling the puts.
Yeah, that's another thing that's scaring me a little bit too. The scariest chart is this fund flow chart. That's what spooks me the most. Second is that I wouldn't say we're at the point where we had that VIX explosion, that last blow up, but you're starting to see put sellers getting a little cocky out there right now. Okay.
Yeah. I mean, look, it is summer. It's summer.
I know.
It's summer. They have a historical precedent.
They can sell these out of the money puts naked and it's free money. You understand?
Yeah.
And it only takes, as you know, Katie, that one time. That one time they get caught, it's all over, right?
I know. Yeah, oh, I've seen it. And by the way, I owe Rancha kudos. Last time we talked on the show, I asked him if he was a bull or a bear, and he called the top. It was at 4,100, and it just fell out of
Nice.
bed. I know. I was like, "Go, Ranch, that's sick." He was dead sure too. He's usually kind of like,
Yeah.
and then he was like, "No, I'm a seller." I was like, "Wow, okay, there we go." So, good job, Ranch. Thanks. That was a killer call. So all right, so if they go up, what do we do? If they go up, we stand aside and we chip around.
Well, yeah, you can't chase
Yeah.
green. I can't chase green for the
And
life.
then if they what if they pull the rug, right? Because look, Jay, There's air under 3740 to the lows in that 3630 area. And even those 3630 lows, they spent a lot of time there. There's not a single spike bottom. Like, I
Right.
get it, right? In the old days, the tops were like these rounding processes because there was a lot of supply and they just ran out of buyers up there, and then they kind of just meandered down and then picked up speed as they got done. But the structure that we're rallying on from a certainty understanding, it's not, I mean, it's better than it's been, but it's nothing like we've seen in the past 20, 30 years.
No.
Nothing. So
Listen, I don't. I think that's what makes this obviously extremely difficult. Is that
yeah,
I don't. I don't know how this translates into downside. Like, I don't know what level, or I don't know when. I think you have to keep an eye on a couple of things, and the most important thing is the Fed. But something's got to break. Something's got to break, right? It's either something breaks out there and gets the Fed to pivot, right? And if that's the case, things are going to look a lot worse than they are right now, okay? Or the Fed actually nails this, and this process continues in an orderly fashion until they get inflation under control. And you don't have history on your side for that. You understand? But that's more of time anyway. That's more of a process that's going to take a decent amount of time. That's not happening next month, this summer. That's going to take some time if that's going to work out that way. That soft landing. You know what I mean? So that I think it's a waiting game where you got to try not to predict and just stay involved and keep your eyes open and just be nimble and try to make a few dollars on an intraday basis. I mean, that's Katie. I wish I can tell you more than that right now. I'm being honest with you. I don't see anything else.
I agree 1,000,000%. And
I don't see
how much of that is like, we're big game hunters, right? Like, we've taken down some big moves, like big animals in regards to size moves over the years.
Yeah.
And now I feel like we're hunting rabbits.
Yeah, without a doubt. That's exactly how I feel. That's
And
exactly how I feel.
and I feel like, the guy who should have retired at his height of his career or something.
You know what I feel like? Honestly, I told you guys this. Every time I try to get bullish and force myself to look at opportunities other than intraday, I told you I got that little Powell devil on my shoulder that slaps me upside the head and says, "What the fuck are you doing, you idiot? I'm rigging the game. What are you doing?"
Yeah.
Right?
Dominic asks, right, why has the VIX become so disconnected? Because, Dominic, the Fed has stated in their testimony many times to Congress that their job is to keep volatility in the system under control, as that's the number one systematic risk. They are also allowed to trade VIX futures and things like that in their charter. So on their balance sheet is definitely a short VIX position.
Yeah, and VIX, I still believe, like, when this finally ends, you're going to get some sort of pop out of the VIX. I don't think it has to be COVID highs type pop. This is a different type of. How many times have we used the word orderly on this webinar?
Right.
You're not going to get that, and all the premium selling out there is the total opposite, right? The VIX is usually when people are scrambling for protection, and you get that urgency, that panic. You're not getting that.
Yeah, I mean, you could just watch the crypto and the silver markets. I mean, it's probably safer to own silver calls. It's cheaper to own silver calls than the VIX.
Yeah, the guy from Nomura, McElliott, that we were talking about the last time, he had the best line. He said, there are more players that have FOMO for a bear market rally than a crash.
Yep,
You know what I'm
agree
saying?
with that.
There
Hey,
are more
Martin,
players that are eyeing the bear market rally than the crash.
Martin called the VIX suppression price stability.
Price stability. Yeah.
Right, that's exactly right. And so, I mean, what do we know, right? I mean, Jay, what do we know? We know that their balance sheet is huge. We know that the collateral chain can't sustain a margin call of 20% across the entire spectrum. So they got to keep things up here.
Yeah. Well,
So,
the thing is, again, we know that they're not just going to sit back and let things blow up, right? We know that. That's not even a question. Okay.
Right.
But at the same time, we know that they're telling us that they need to tighten the game.
Right.
Further.
Stocks are collateral damage.
Right. Exactly. For inflation.
Right.
So they will allow more damage in the market. We know that, but they will step in at some point when things get really dicey.
Right. And so all the pros on Bloomberg are always like, watch the credit spreads, watch the credit spreads. Right. And they're always like, oh, yesterday they were at record highs, 5.3 or 5.7.
We watch the spreads every night, every day. You know, I never look at them in a bull market, but now I have to look at them every day. You know what I mean?
So, right.
But so like we're saying, you know they're not going to let it blow up, but there's still room between where we are now and blow up. You know,
right.
There's still a decent amount of room. There's still a decent amount of room. That's the problem here.
Officer, I was going 85, but I was not trying to break the world speed record. Right. Like, it's all.
I will say this though, Katie, on an intraday basis, what I think we can look for, and a lot of us have been doing this anyway, when they do flush them right now, the way things are, positioning wise, when they do flush them like they've been doing the last few days, they're on an intraday basis, there should be plenty of squeezes. In other words, they're not going to allow that bearish positioning to just sit back and enjoy the ride, even if we're headed lower. Okay. I'm not even saying, I'm saying even if we're headed lower, there will be plenty of these violent intraday squeezes, red to green, because of positioning out there.
For sure, right? Like on a hopeful note to everybody who's listening, who we make it sound like it's impossible. We're just shortening the duration. We're scalping more than home run hitting, and it becomes more like factory work where you make good amount of money, steady cash flow, slow positive growth to that cash flow does wonders for your emotional well-being as well as your trading account. And so
you practice, and it allows you to work on your discipline, right? At the same time, not to sound corny, but you're taking your losses. You're going to have losers. You're not going to bat 1,000. That's a given. You're going to learn that early on as soon as you start playing intraday.
Trading is a job. It is not some sort of ego gratification home run hitter.
Yeah, you're not going to feel good, right? You're not going to feel good. It's a grind. Right,
and so Jay and I are pretty much adrenaline junkies, so we love it when the surf is huge in the markets. And so now we're saying that perhaps we're going to have to go back to doing our job instead of surfing.
Yeah, I mean, that's exactly what it comes down to, right?
Right,
and so no easy money.
Right, so in these time periods, it's probably really good to have someone in your life that's a friend or a spouse or a partner who pats you on the back, because
gives you a hug.
Yeah, gives you a hug, because there'll be many trades that you're expecting to go further than they're supposed to, and they don't, and you have to settle, or you cover too early because our expectations for giant moves are smaller, and things like that, right? So it's probably important to make sure that you have friends like us, right? You can always come and find me and have a beer.
Exactly.
And
Yeah, that's a good point. It goes, I think this is a better introduction to the game right now than coming in last year. Last year, they learned everything the wrong way. They learned everything. It was almost like a dream of fallacy. Unicorns last year, right? Every
Fantasy, Jay. Come on.
fantasy. You're right.
Fantasy. It was
Everything goes up. SPAC, this, that, doesn't matter. Based on the story, the stock could get hyped up. The riffraff on Reddit can pump stocks to $100. Anything you can imagine happens. Anybody who started trading within the last 2 years right now is getting walloped and probably will be out of the game. But I'll tell you this, again, it may sound corny. The people, the seeds that are sowed and grow out from this, starting in this mess, those are the guys and gals that are going to be around for a long time. I'm being honest with you.
Yeah, I think that could be a book.
But
right
it's
there.
true. It's true. It's really true. I tell you, Katie, on this note, I know we're probably gonna wrap it up. I was fortunate, okay, and I'm the first to admit it. To when I got into the game, I had nothing. I was wet behind the ear. I had nothing to lose when the tech bubble blew up. You understand? I was sick to my stomach of everybody making so much money around me, and I had nothing. I had no clients. I had no money to put in these stocks, and they were splitting and they were going bananas, and I felt left out. But when shit blew up, I had nothing. And I was the only one, literally, in the whole entire firm who was around to keep their eyes open when the dust settled and to pick up the pieces. You understand? I grew a business out of that tech burst. Like, the timing was just, I was fortunate. You understand? If I started my business in literally 97, 98, I would have blew it all. I would have lost it all probably in the tech bubble. All my clients, everything. But instead, I started to build a business post 2000. And how fortunate was I to do that?
Right. The star quarterback in high school never really made it in business, but us who were like the third string guys.
Yeah.
Right. I mean, what Jay's saying is actually super, super hopeful, I think, is that with a good discipline and a work ethic and some friends around you to pick up the pieces if you have a bad day, that this is the beginning of a new era in trading. And I think that we're all adjusting to it. And
what usually happens is when this finally does come to an end, one, most people aren't going to have the liquidity and funds to take advantage of anything at that point because they're going to be blown up, right? Or tied up in stocks that are down 80% off their highs. Or two, they're going to be so distraught from what they saw, right? Because they got involved the last couple of years. And think about it, fantasy land to now this, right? That they're not going to want to touch the equities that's what happened, Katie, right?
Yeah, I'm just laughing about my ayahuasca line. I'm just like,
what happened to all the retail that came in and started day trading? Remember how many day traders into that 2000 top? Everybody and their mother was day trading, right? And then nobody wanted to touch equities after that for a decade.
Yeah, people used to ask me if I was a day trader, and then no one asked me for 20 years.
Exactly, right? It was like you were a dinosaur day trading. Oh man, it was crazier than now, crazier.
Crazy, right? I wrote this as a note to myself when I was looking at the way the market was trading. I said, they go looking for more crazy people to follow them along. With each trend, right? I was like, are they finding them? Like, is the trend at hand finding
enough crazy people to take
right? And right, like in a sense, if you're buying them, you have the bias that things are going to be fine and going up, right? And right, so like the people buying them today were like, oh no, look, my confirmation bias to the bullish perspective is right. Right. So I guess like, and then so the market goes higher, trying to draw in more people with that same bias.
And then knocks them on their ass.
Right. And then knocks them on their ass. We just have to ask our question, are they still, is the trend acting in a way that is drawing in people with that bias?
I don't know what I'm thinking right now. You want me to figure out?
Right. I mean, no, but I think that's healthy. Like in a sense, like we don't have like, we're so confused. We're like, how's that? Like we're saying we're getting out of losers so fast because we don't know which is right, up or down.
Yeah.
right? And so in a sense, then therefore, who else is left? The people with these huge biases, like the people who are bullish have a huge bullish bias, right? So the market starts to go up, and what is this? The market does is it reinforces their bias, which is in a sense their perspective, right? They're like, hey, look, I'm right, I'm valuable. This whole bullish thing I've been talking about is coming to fruition. I've got a chance, like I feel better about myself because the market's reinforcing my bias. So
Yeah.
then
Yeah. That's
right? And then
smart.
I was just like, okay, well then our goal as traders is to judge whether or not, as I said, they go looking for more crazy people to follow them along. Are they finding them? And
Yeah.
it,
That's a tough thing to gauge right now in this.
right, I know, right? So the most recent work that I've seen on tops is that the buying dries up. It's not a big seller all of a sudden shows up.
Right. Right. The buyers get exhausted, right?
Right, yeah. So if we're looking for tops, then it's going to be a dearth of people showing up to buy them at the highs,
Right.
which right, which means that a top is going to be dull or
So,
not a,
oh, but you're talking now even on a short-term basis here?
you know, well, I mean,
Yeah, you're talking about
anything from like a 30-minute chart to a
yeah,
daily,
yeah, yeah, yeah.
right? Because the machines are dominating the micro and the 1 minute time frames.
So now, and the opposite of that, bottoms are when sellers
Just there
are
are no more
exhausted.
sellers,
Right.
right? They're exhausted, right?
Are we there yet? No.
No.
How could we be with this chart in front of my face?
I don't know.
Huh? How could we
Yeah,
be while I'm staring at this chart as I'm asking that question? Huh? How could that be?
it can't be.
It can't be.
It can't be.
It can't.
Annie wants to know, how do you all plan to add size? Adding size when we get into a winning position, um, it's going to
Oh,
take a lot more structure in the marketplace. It's actually going to have to be from a whole societal level where things start to make a little bit more sense for us
yeah,
to.
you can start to see constructive sign. If you're looking, you will see constructive signs out there. You know what I mean? You'll
Which should be obvious,
right, right.
right? Because
Yes,
if we're
stand out like a sore thumb. Exactly,
right,
because of
because
how
everything
awful.
right, all of a sudden you're like, wait a minute,
Yeah.
something makes sense. Like,
The problem is usually when that point comes, when that point shows up, people are so disgusted that they're
yes,
not picking up on it.
yes,
Understand?
at
But
the
like Katie's saying, it's most of the time it's obvious because we haven't seen it in so long and it hasn't been around, right?
right. At the lows in 2008, the S&P traded sideways at the low at 665 for 5 days. 5 days, and it was just quiet, drop a pin. So a lot of it's almost like what's not there.
Yeah. Well, 2008, the low, I don't even remember because I wasn't even looking for it. That's
Uh-huh.
how effed up I was. Okay. I was pulling money out of banks. Okay. I was in my bunker. I thought the whole financial system as we know was coming to an end. Okay.
It was trading 665, the 550, 700 fence. You'd sell the puts and buy the calls at a credit.
At a credit.
At a credit, the 665 underlying, the 550 puts, 700 fence was a credit.
And underneath the hood, individual names, single digits, ready to go to zero. So
Amazon was $58.
yeah, Las Vegas Sands was a buck.
A dollar.
Sheldon Adelson, a multi-billionaire, okay, couldn't get credit to fund the casinos. He was ready to go under one more day. Okay, think about that for a second.
Right.
Right.
So the
Besides
Fed,
every major bank getting bailed out.
right, the Fed can't. So Jay, the Fed's never going to let that happen.
Oh no way! They tried it. They tried it. Right, Bernanke and Paulson. That was the thing. All right, let the free markets work. Let's let Lehman go under. Right? They tried that experiment. It didn't work out well. Right? They tried it.
Yeah. Yeah.
So
now we're paying the price.
yeah. So now, and that's why they people wanted to try it because once you start rigging the game, the free market's over with. The game doesn't go back to the way it was. It's always rigged, right?
Yeah, how's this Lefty Lewis? He was a floor broker on the $2 broker on the stock exchange. And I knew him from skiing in Vermont. And he was old, and I went to visit him in the hospital not long before he died, right at the beginning of QE. And I said, will the Fed ever stop? And he said, why would they?
Yeah, you can't, and they can't. They can't.
They can't. No, they're not going to stop.
Look, COVID, right? Look, I mean, if they didn't, this experiment, they didn't do it in 08, COVID hit, who knows what happens? I mean, can you imagine? Think about, like, before the Fed getting involved, what things would look like when the global economy has to shut down, literally shut down, people locked in houses, tumbleweeds in Manhattan. You don't see a soul on the street anywhere, and nobody went bankrupt. There was no bankruptcies. How'd that happen?
That's a great point, right?
Free money. That's how it is, right? The Fed threw in the effing kitchen sink. That's why the balance sheet looks like the way it does.
Right. 40% of all money printed was printed during that time.
I mean, for Christ's sake, that on top of fiscal, they're mailing every jabroni under the sun a check to open up a Robinhood account and sit in his locked house and start trading options, right? I mean, they were throwing money all over the place. Otherwise, who knows how COVID pans out? It's not going to be pretty.
So
right?
Jay, I want you to create a Post-it note that says "Release yourself from logic" and put it on the bottom of your screen.
Definitely. I got to do that on my
right, and then I have to remember to smile. Right, here we go. Smile. There's my rock. It says smile.
Oh God.
And then here's another one. I got this when I was windsurfing in Oregon. It says how to escape a tsunami.
How to escape a tsunami? Where are you going? There might be a tsunami.
On the Oregon coast.
Oh, Jesus Christ.
But I mean, a lot of this job
scary, those tsunamis.
This is the same. You have the same job, how to escape a tsunami. And but anyway, thank you everybody for coming, Jay. It's great to hear you.
Yeah, always a pleasure. Love saying hello, seeing the Katie.
Yeah,
boys and girls out there.
Funny tweet about the crude oil thing.
Heads up. Stay patient. Don't go nuts. And be around to pick up the pieces.
And yeah, do not look at that chart anymore.
Yeah, and do not look at the flow chart ever again. You'll have
do not. We'll just call that an isolated incident. It's outdated, Jay. It doesn't mean anything. Just
exactly.
Move on. Nothing to see here, Jay. Just move on.
Have a good night, everybody.
Thanks, everyone. Talk to you later.